Islamic Financial. I'm going to talk a bit loud only because the mic won't reach, so I'd like everyone to hear, inshallah. So, inshallah, I will take all questions at the end of the presentation. And the presentation is on Islamic financing. My name, once again, is Richey, and I work with a company called UIF, which stands for University Islamic Financial. I have been with UIF for 17 years, alhamdulillah, and I've seen the company grow over a period of time. And the company has been around for over 20 years. And so for some of you, this is the first time you may be hearing of UIF, and for others, you may have heard of us before. We've been to this masjid about a year ago as well. We've done a presentation, and alhamdulillah, we've grown since that time as well. A lot has changed and happened within the year. And so here's a little bit of a background of UIF. Now, if you are hearing about us, you will see that alhamdulillah, we have done over $5 billion in home financing. We have done over $100 million in commercial real estate financing. We are operational in 29 states. Now, if you look over here, you'll see that we are operational in 29 states and not all 50 states. And the reason is that we do not offer an interest contract in our Sharia-compliant financing. We do. If we did offer an interest contract, then we would be operational in all 50 states. But because our contract is Sharia-compliant, we have to make sure that it works within the state that we are operational in. And we are a private company. We are a subsidiary of a community bank. UIF itself is not a bank. We have investors, and we also have Muslims like you and I who put money into deposit accounts in order to be able to fund itself. And I'll go through that as well. When I started with UIF 17 years ago, we did home financing. That was the only thing that we did. And alhamdulillah, that was and still is the need of the Muslim community, inshallah.
And control from here.
Okay.
Yep.
So, as I started at UIF 17 years ago, we were just a home financing company. And since that time, alhamdulillah, we've grown to meet the needs of the Muslim community. Because as you know, our needs in the community is more than just home financing as well. And so if you look at the slide over here on my left, you will see that we offer 4 different products. And these products is what the Muslim community is asking for and using. And inshallah, as the community uses more of our products and services, we will continue to grow with more products. As I mentioned, we offer home financing. We offer commercial real estate financing. We offer vehicle financing, car financing. And last but not least, we have a Sharia-compliant halal savings account. It's very important, a halal savings account. And I'll go through these different products in the coming slides as well. But these products here and our great customer service is what makes us #1 in Islamic financing in the United States. So you will see that amongst other companies that offer maybe 1 product or 2 products, we offer many different products, and we are #1 in each of these categories that we offer, alhamdulillah. Now when it comes to residential financing, we offer financing for single-family homes, 1 unit, 2 unit, 3 or 4 unit property. If you're looking to purchase a home to live in as a primary residence, or as a second home, like a vacation home, or an investment property that you're looking to rent out, we are able to do so as well. Last but not least, if you're looking to refinance, whether you have another Islamic finance company or a traditional mortgage with interest that you're looking to refinance, we also do that as well. And if you have equity in the property, you can also do a cash out refinance where we invest in the home as well with you and give you cash out as well. So this is based on the residential property. Then we also offer commercial real estate financing. With commercial real estate, we finance the property itself, whether it's a shopping center, a medical office, a car wash, a hotel. We do many different commercial real estate transactions. So if you're looking for real estate financing, please reach out to us, inshallah. We do not offer business financing. So if you need the build out of the store, equipment and such, we currently do not offer equipment financing or store or business financing, but we do the real estate aspect of that as well, including non-for-profits. For example, someone looking to purchase a building for a masjid or an Islamic school. We do commercial real estate financing for non-for-profits as well. A third product that we offer currently in 3 states. We offer vehicle financing, which is in Ohio, Michigan, and Illinois, and we hope, inshallah, soon to bring over to the East Coast, including Florida, which is vehicle financing. As we all know, the cost of cars have gone up dramatically, whether it's a new car or used car, the costs have gone up as well. And many of those 0% offers on purchasing a vehicle are no longer there as well. Alhamdulillah, we do have a Sharia compliant option for you in purchasing a vehicle or buying out your current lease as well. So inshallah soon we will be operational in Florida, but as of today we do not offer commercial real estate vehicle financing in Florida. Lastly, what we do offer that many of the community asks about, many of you will have a question: where do you get your money from? Very important question, right? Do you borrow money from the bank? And so if you borrow money from the bank, maybe I should go ahead and go to the bank and borrow the money before you, right? This is a question that we often get. Alhamdulillah, we do not borrow any money from any bank. There is no interest in our dealings, whether on the front end with you or on the back end with our operations and investors. We do have investors that have invested in UIF, but we also offer a halal savings account. Very important. A halal savings account program in which Muslims like you and I put money into a deposit account. We use these funds in order to invest in those transactions that I mentioned to you, whether it's a commercial real estate, residential real estate, or vehicle financing, and then we give you a percentage of profit back. There's a profit sharing account. So this is very important. So if you have money sitting in a checking account because you don't want to deal in interest, this is a great way in order for you to make a halal return on your money that is just sitting there. With your savings account, we have 2 different programs. We have a longer term program, which is a 12-month, 36-month, or 60-month investment. You put your money in, and then you get your funds out at 12 months. Or you can have a savings account, which you can put your money in today and take it out tomorrow, for example. There is no time frame. Okay? Either way, you're investing with us, and you're able to make a profit. With our savings account or the time deposit account, it is, since it is a deposit account, it is government insured up to $250,000 per individual, or if it's 2 people on the account, let's say husband and wife, for example, then it is covered up to $500,000 as well. With the savings account, you also get an ATM card. If you want to pull your money out at any time, you can. So this is a very flexible way to make a halal return with money that you are not using as well. So keep that in mind. So this way you can invest money that is just sitting there as well. Now, to get into the crux of the home financing program that we offer, many people ask, what is the difference? They'll say, Brother Wissam, it's the same thing, right? If you go ahead and you compare Islamic finance with the traditional financing, some people say it's the same thing. And they are confused because the end outcome is the same. The end outcome. So if you use Islamic finance or you use a traditional mortgage company, you're going to end up the same. You're going to own a house. But the difference is the relationship that we have with you, the process, and the paperwork is different. Very important to know that, right? Because we know Islamically, the end outcome does not make something halal if it is just the intention is not there and the contract is not there. We have to make sure both are there. And alhamdulillah, in our documents, it is completely different. There is no interest contract that you are signing. Very, very important. Okay? There's no interest promissory note. There is a partnership agreement. So the relationship matters, and the product itself, the asset matters, right? Give you an example. Let's say, for example, I tell you I cannot stay much longer past the presentation because I have to go home to my wife and kids. You will not say anything. You'll say, okay, he has wife and kids, he cannot stay too long. But if I tell you, brothers, I can't stay too long because I have my girlfriend and kids waiting at home, what will you say? You'll say, Astaghfirullah, Wissam, you need to leave now. Right? What's the difference? Both are going to live in the house. Both are going to have happy times and bad times. Same bills, same problems. The difference is one has barakah, blessings in it, and one does not. Because of the contract. Right? Aqd al-Jawaz, the marriage contract. Everything else works out to be the same. Very important, brothers. How you conduct your life matters. The end outcome does not make it halal if both are the same. Kind of like the same thing. Today I had lunch with a brother in Orlando. When I was sitting with him, he went to go look for places. So I told him, brother, you're from Orlando, why don't you pick the place? And you can't expect me to pick, because I'm from New Jersey, I just flew in today, so you need to pick. He said, well, I'm not sure about this store, if it's halal meat or not, I'm not sure about that store. And so we went to a store that he felt comfortable eating in because it was zabiha halal meat. Right? But what's the difference? You can go to two burger joints, one is halal and one is not. The outcome, the burger is still the burger. But one is halal and one is not. Very important. The process and the paperwork is what's different that distinguishes a halal transaction from a non-halal transaction. And you will see here on the screen, very important. I've been with the company for 17 years, as I've mentioned. My title is Vice President of Sales. The reason why I'm telling you my title is because I'm not a sheikh and I'm not a mufti. Okay? And the reason why I want to highlight that is we need to make sure if someone is saying something is halal, then we have people who are experts in this field who can make sure it is Sharia compliant. Now the scholars you'll see here on the left, if you Google their names, you will see that they are well-known experts in Islamic finance that are on our Sharia board. On the left, you have Mufti Abdullah Nana, Sheikh Nizam Yaqubi, the late Professor Sheikh Hussein Hamid Hassan, al-Irhamah, and Abdul Bari Mashal as well. These are scholars in Islamic finance, not just here in the United States, but across the globe. They sit on many boards of Islamic finance companies. Then if you look on the right, you will see other sheikhs that have used our program, which gives us a comfort level that the product that we offer as well is Sharia compliant. You have the former president of ISNA, Imam Muhammad Majid, Imam Zaid Shakir, Sheikh Hamza Yusuf, Imam Tahar Anwar, and if you go on our website, myuif.com, you will get a greater list of scholars as well. Now, to get into the program of how Islamic finance works, here is an illustration for you. So, you will find the house, negotiate the price on our behalf as a partner, and together we will purchase the home using our musharaka or partnership agreement. Then over a period of time, you will make monthly payments and buy out our share of the home until you are 100% owner of the property. Let's say, for example, the house is $100,000. And let's say you are going to put 5% down. UIF is going to go ahead and purchase the other 95% and co-own the property together with you 100%. Every month you are going to use the house completely. You can live in it, you're going to rent it out, whatever the case is. You're using the home. Every month you're going to make a payment. Part of that payment is going to go towards buying out our ownership of the home. So UIF starts off with 95% in this example. You make a monthly payment, your share goes up to 6%, 7%, 10%, 15%, 50, 60, 70, 80, until you become 100% owner of the property. Okay? Now, in your monthly payment, part of it goes towards buying out our share of the home. But while you are buying out our share of the home, you are also using our portion of the home as well, and we make a profit by charging you a rent for using our portion of the home. Okay? So when you make a payment, let's say that payment is $1,000, for example. Let's say $300 is going towards buying out our share of the home, and $700 is going towards the rent or the profit that we make. Next month, you have more ownership in the property. Let's say from 5% went to 6%. Your payment still is $1,000. But instead of $700 going towards the house, towards the rent, it'll be $690 that goes towards the rent, and $310 goes towards buying out our ownership of the home. So the more ownership you have over time, the less the rent goes, and more towards buying out our ownership until you become 100% owner of the property. So this is how our partnership model works, our musharaka model in purchasing the home with you. Now, when you are purchasing a home, there are 5 steps towards purchasing a home. The first step is to get pre-qualified, is to give us a call to find out how much we are going to invest with you into the home. So you will call Sister Ruby and you will get pre-qualified. Sister Ruby is your local representative. She lives here actually in Newport Richey as well. She knows the program extremely well, and she will get you pre-qualified. Once you speak with her, she's going to ask you a set of questions and then give you the pre-approval letter. It says that you are pre-approved to purchase a home for $500,000 with, let's say, 5% down. And it also gives you permission on our behalf, UIF's behalf, to negotiate the price and purchase the home. Okay? To get pre-qualified, number 1. 2 is you're going to shop around for a home with a realtor. If you need a local real estate agent, let Sister Ruby know, and she'll put you in touch with a real estate agent who knows the community and will be able to negotiate the best price for you, especially in this really tough market. As we all know, real estate has always been a hot commodity, but even so now, you all know how much prices have gone up for homes to purchase or even to rent a home as well. So it's important to work with a local real estate agent. After you have found a home, then you will come back to us in order to provide documents. We will then collect your pay stubs, W-2s, bank statements, and then it will be approved, inshallah, by our underwriters, and then we will be able to close on the home. The total process takes about 30 days from once you have a signed sales contract to closing. Sometimes we can close sooner than that if you have everything ready as well. Okay, so this is the basic steps in terms of purchasing a home. But one of the questions that we often get is that, what is the criteria that you use to qualify people? Okay, what does UIF use? And we use 3 main criteria. So I'm going to test you, inshallah, so please pay attention to this part of it. So the first is your income. We look to see that you're able to make the monthly payment. Okay, very important. Now, if you have no liabilities, no car loan, no student loan, no credit card debt, then roughly for every $20,000 of income, you may qualify for about $100,000 in financing. Okay? No liabilities, then for every $20,000 of income that we see on your tax returns, you may qualify for about $100,000 in financing. So if I'm looking to finance $400,000, how much should my income be about? $80,000. We have a lot of mathematicians here or businessmen. Very good. So about $80,000. Now, you may make that $80,000 as W-2 income. We use that money, the full gross salary or gross income. Or if you are self-employed, we take your net income. Now, for many that are self-employed, their income may be a lot higher, but they show a lot of expenses and deductions. And so depending on what type of work you do, some of your expenses we may be able to add back. For example, if you are a truck driver or a Lyft driver, Uber driver, DoorDash, you have mileage expense and you have depreciation expense. We can add those back. Sometimes, if you still don't qualify, you may be able to get a cosigner, someone else who has good credit, good income, and not too much liabilities, we can combine the income and inshallah get it to work from there. So number one is income. The second is your credit score. Since we are investing with you into this home, we want to see if this is the right decision to make in investing with you into the house, so we do look at your credit score. The higher the credit score, the lower the down payment. The lower the credit score, the higher the down payment. So if you have good credit score, your down payment could be as low as 3%. That is the lowest that we have, which is 3% down payment. Last but not least, as I was mentioning, the down payment is required. You can put as low as 3% down. The more you put, the better it is for you, because you will have a lower payment as well. Now, you may not have the money for purchasing a home. You can get gifts from family members. Very important. So family members write you a check. You can deposit those checks and use that to purchase a home. Do not deposit cash. One of the requirements is to make sure that none of the money is borrowed. So do not deposit cash. You'll need to get deposits from family members. And Sister Ruby will be able to walk you through the guidelines for your assets. Okay? Very important to make sure that you understand the guidelines so we can make this as smooth as possible. So those are the three guidelines that we look for in general to qualify you to purchase a home. Now, as I wrap up the presentation, I want to go over the highlights of why to use UIF. Very important. So, alhamdulillah, UIF has been ranked #1 9 years in a row by Islamic Finance News Magazine here in the United States, whereas no other company has been ranked at once. So, alhamdulillah. 2 is we want to make sure that we handhold you throughout the process. Right? Buying a home is a very exciting time, but it is also a very nerve-wracking time as well. Because you are moving, you have a lot of stuff in boxes. If you have kids and their clothes is in the box and you have to go to work, you're also going to have a lot of pressure from the seller and from the real estate agent. They're going to say you have to close on time. If you don't close on time, they're going to cancel the deal and so on and so forth. So you want to make sure you're working with someone who will be able to handhold you throughout the process and make it as smooth as possible. Alhamdulillah, Sister Ruby will be able to assist you with that. Next is we are very competitive when it comes to your monthly payments, right? I like to say from my experience that everybody is Sharia compliant until it costs $1 more, right? Once the payment becomes $1 more, people start to give different fatwas of using interest and why interest is halal and for your home and so on and so forth, right? So our pricing is very competitive. If you compare us to a traditional mortgage company, our pricing is in the middle. You will find some mortgage companies that are higher than us, and you will find some that are lower than us, okay? We do our best to be as low as possible and as competitive as possible as well. And when you compare us to other Islamic finance companies, you will find that we are amongst the lowest as well, and we don't charge any monthly fees. Other Islamic finance companies charge you a monthly LLC fees to make a profit off of it. We don't do that as well. Lastly, we give back to the community. We sponsor different events. We have an Imam's Generation College Scholarship as well that we give up to $50,000 for different students that go to college as well. So we give back to the community. It's not just about a business transaction as well. So keep that in mind. UIF, alhamdulillah, is part of the community, not just as an investor in a home. As I mentioned, ranked #1 by Islamic Finance News Magazine. And last but not least, as I like to say, Google or Sheikh Google, we all look at the reviews, right? If you want to purchase a product or you go into a restaurant, you look at the reviews. These reviews are from the community, people who have used UIF and have given us their feedback on their experience, and overwhelmingly it's been great and positive. And when we do fall short and we do make mistakes at times, which does happen, we step in to make it right and also to learn from it so that we can give the best service we can as Muslims, inshallah. So I'm going to wrap up the presentation and take questions from the audience here. Before we go ahead with the questions, we're going to pass around a sign-in sheet. So if you sign in, Sister Ruby is going to email you a book on Islamic finance, a PDF book on Islamic finance. She will email you, so please fill it out just clear enough so that the email doesn't come back bounced if you want the PDF booklet. Okay, very important. I know some of you may be in the medical field and you write very fast, but please, inshallah, write clearly so that the message will get to you, inshallah. So we'll go ahead and take questions from the brothers and sisters. Yes.
Somebody have no credit, some maybe no down payment. What's the solution?
The brother asked, is there anything less than a 3% down payment, like 0% down payment, correct, brother? Currently, we don't have any 0% down payment. We have the minimum right now is 3%. You said, what is the solution? I would say the only solution would be to perhaps get gifts from family members to help you with that 3%. We also have, for first-time home buyers within a certain income, we can contribute up to $2,500 towards your closing costs. So we have a first-time home buyers program based on income, in which up to $2,500 will be given. So that will help with the closing costs, but the down payment could be from family with a minimum of 3%. Currently, we don't have 0%. Maybe that'll change in the future, but as of today, we don't.
No credit.
No credit. So that's a very good question. So the brother asked, what if you don't have credit? I didn't mention that earlier. So we do have a program if you do not have any credit. Okay? What does that mean if you have no credit? It means we are going to check your credit and nothing needs to show up. Nothing bad. So some people have no credit score, but they have a lot of negative on there. Missed payments for this or that and so on. That's negative. That's no credit score. There may be no number, but it's negative. If we pull your credit and nothing shows up, we can still work with you. We need 3 different bills that you've paid for 1 year. 3 different bills. It could be cell phone bill, electric bill, gas bill, your rent. 3 bills that you've paid for 1 year. Then we can work with you, but the down payment does go up to a minimum of 20%, not the 3%. If you have no credit, the minimum down will be 20% if you have 3 different bills that you paid for 1 year. Yes, sir.
So on which basis that you guys choose the rent amount? Is it based on the interest rate or just what is in the area?
It's a very good question. The chef's question is this: how do you calculate your monthly payment, right? Which is the rent, which includes our profit. And so we look at the industry that we're in, and we look for a return on our investment into the home that is competitive to the mortgage industry. So if we look for, let's say, a 6% return annually, or 7% return annually on our investment into the home. Okay, so we have a percentage return that we look for, not based on the local rent. And the reason is because of the fact that the rental portion is going to vary every few towns. With us, we're able to help anyone who calls right away, quickly with a payment that is competitive, and it is when you are comparing rent, usually to monthly mortgage payments, usually rent is more than the mortgage. So the person would be disadvantaged. Now, calculating a percent does not make it haram, right? 6%, 7%. It could be, but it doesn't have to be haram. And I'll explain why. If I am lending you money, and I am telling you you have to pay me back 2% interest on the money I am lending you, is this haram?
Yes.
Yes, right? Why is that? Because the relationship I have with you is of lending, borrower-lender relationship. It's haram. Doesn't matter the percentage. It could be 2%, 0.5%. If I am investing in a house, investing in a car, I'm investing in something, a physical asset, and I'm making a 5% profit, 10% profit, whatever the case is, this becomes halal because it is not a lending transaction. It is one based off of a physical asset. Kind of like if you went to Macy's. If you go to Macy's and you see something that's 20% off. The shoes are 20% off. Is that percent haram? No. Right? Because it's off of the shoes, physical asset. Yes, sir.
So that means if I'm renting, I'm giving you the portion of the money, so you could charge me renting for my house, like let's say $1,500, and I have my neighbor next to me, he's paying rent for the same house, the same area, just one south. Am I understanding right?
Correct. The neighbors, the rent in the area is not going to affect our payment up or down. It could be the neighbor could be less, the neighbor could be more. We are going to tell you what the pricing would be with us, and then you can make a decision if that is the right decision for you. Our payment is competitive in the mortgage industry, not on the rental portion. Yes, brother.
Property insurance. Is it compulsory?
Property insurance is compulsory because it is our investor requirement, so unfortunately it is compulsory. That is correct.
Now it's go way up here.
Yes.
So is that a shared responsibility though? Is it a shared responsibility between UIF and the homeowner, or is that solely on the homeowner?
It's solely on the person who's using the property, which would be you.
But since the home is a partnership, shouldn't that cost be spread between the two?
It could be spread, but the reason why we don't spread it is because if you get it yourself as an individual, it will be cheaper than if we get it together as a company, then the commercial insurance goes up dramatically. So it is technically cheaper when you get it yourself than if we share it together.
Not necessarily to get it, but split the cost, for example. So, like, so you're going to take some of that money, that portion, right? You're going to put it toward escrow, right? That escrow is money coming out of my pocket, for example.
Correct.
Why is UIF not investing money in that escrow to pay for that share?
Sure, because
Since it's a partnership.
It is a partnership, but our partnership is not a 50-50 partnership. Why? Because we're not doing the same thing in the house, right? So I think a lot of times people think a partnership is a 50-50 thing. And it's not, for multiple reasons, right? One, we may not be putting 50% down each. And maybe we are putting 50% down, but we're not doing the same. You're living in the house, and we are not. You're benefiting from the school systems, from the roads, the police department, so on and so forth. We are not. So in investing in real estate, our partnership is different than investing in, let's say, a business of a pizza shop, for example, in which we're 50-50. And or it may not be, right? Let's say we open up a pizza shop and it costs $100,000. You may put $100,000 and I don't have any money and I just put the labor. So you may say, you know what, Wissam, you keep 75% of the profit, or 25% of the profit, and so on. The point is that a partnership doesn't mean 50-50, it means some risk associated with whatever it is that you're doing. So in the real estate transaction, our risk is based on either you not paying, or God forbid something happens to the house and the insurance doesn't cover that issue, that claim, whether it's here in Florida, you have hurricane loss and other stuff, then we take that loss based on whatever ownership that we have. So if we have 80%, you have 20%, and we take 80% of the loss and you take 20%. So depending on that particular scenario. Yes, brother.
So in the fate of default, right? Who takes the fall on that?
So the brother's question is that what happens for non-payment?
Yeah.
Right? So when we purchase a home together, we promise to stay with you for the full term, whatever that term is, 15-year, 20, 30-year term, and you promise to buy us out over a period of time. Now, let's say if you're not able to make your monthly payment. Your payment is due by the first of the month, and then you have 15-day grace period, okay? After the 15th of the month, you have a fixed $50 late payment fee, okay? So it doesn't matter if we are financing a house for $50,000 or $2 million, which is our financing limit. The late payment fee is still $50. Why? Because from a Sharia perspective, you cannot profit from a late payment, whereas a traditional mortgage, they charge you 5% of your monthly payment as a late fee so that they can profit off of it. Now, if we keep going, the worst case scenario, right? It's not about the $50, there's a bigger issue at hand. Depending on what your situation is, you give us a call and you let us know that you're not able to make your monthly payment. You lost your job, you're ill, something happened, we will do our best to work with you. I've seen us stop the payment, I've seen us lower the payment, I've So let's actually do nothing. It all depends on your particular situation. Okay? We keep going worst case scenario further than that. Let's say nothing could be done. Now we're going to ask you to sell the home. When you sell the home, you keep your promise to buy us out, and you keep the profit on whatever you sell the house for. Now, if we keep going worst case scenario, let's say you don't want to sell the house and nothing happens, then eventually we will follow state law and the property goes into foreclosure. So that is kind of worst case scenario timeline from beginning to end. Yes?
So another question regarding the $50 late payment and the 5% versus like the conventional banking and Islamic financing. Regardless of whether it's 5% or $50, how is that any different? You're still charging on a late payment. You're still charging a profit on a late payment.
No, that's where that's not correct. We're not charging a profit. We did a study probably 10 years ago, which has probably gone up because of all the cost inflation, that following up on a late payment costs around $50. And so that's how we came up with this number, that the fixed late payment is $50 based on administrative costs of phone calls to you, emails, regular mail, and follow-up. One thing further that we do that no other company does is that late payment fee, that $50, we actually donate it at the end of the year. We don't keep it, right? But it is a way to get people to pay on time, or else people will not pay it, right?
So how do you donate it if you're spending it on administrative fees?
No, we cover that administrative fee, but how did we come up with that fee? Is by, doing a study of what that would cost. Yes, brother.
I have a quick question on your investments. How do you calculate the return for the people who invest money?
That's a very good question. So, excuse me. So, the brother's question is on our savings account program, how do we give out a profit? How do we calculate that profit, right? So, we've been doing this for over 20 years. So, we have a track record of what our returns have been. So based on those return studies over the years, we say that we have a projected yield that you may get. Okay? So what is the estimate? So right now we are estimating that if you invest or have a deposit account, the percentage that you may get return is around 4.25% approximately.
Do you follow Prime Plus?
No, there is no Prime Plus anything. Our anticipated profit is around 4.25% right now. Okay, this is based on what we have. So, and the reason why we're comfortable with that is that, let's just say if we were making an 8% return right now, for example, right? So, with that, we would keep, let's say, 3.75% for ourselves, and we'll give you 4.25%. If our profit drops to 6%, we would get 1.75%, and you would get 4.25%. If we would get 4.5% profit, we would get a quarter, and then you would get 4.25%. If we get 3.5% profit, then you get the 3.5%, we wouldn't get anything, right? So it fluctuates. It's not guaranteed. It's an anticipated profit, but we have, like I said, 20 years of data. And I've had the profit sharing account myself, at least for a year, and I've seen it as well. So I'm not just here telling you about it, but kind of as a user as well.
Does this finance which show without credit?
Does this?
This finance which show without credit?
So the brother asked, does the financing with UIF show up on your credit report? And the answer is yes, because here in America we have to follow finance laws, and one of the laws is that says you do need to report on the credit report, good or bad. So either way, if you make payments on time, it will show up good, and if there's late payments, it will show up as well. Any other questions, inshallah, before we
Question about car loans, right? So I see that there's only a couple states there that you have to do it. Can you actually travel to Illinois and say go in and purchase a car there and drive it back and deal with it there?
That's a sharp mind he has. So the brother's question is that currently we have vehicle financing in 3 states, as I mentioned. And this is watched later on. We are in March 2024. Currently, it's in 3 states, vehicle financing: Illinois, Michigan, and Ohio. The next state will be Texas, which will be in the next month or so. And then I hope, inshallah, bring it to the East Coast. So you cannot go to that state, finance it, and come back. It has to be in the state where you live, and it's going to be registered. So those who live in Illinois will purchase in Illinois and register in Illinois and such. But soon we will have it in the majority of states. So we offered this program last year. We started, vehicle financing. So what we want to do is we don't want to open it up right away and then we don't know what we're doing, right? It's important that we know what we get to know what we're doing. Every product is different. Home financing is different than vehicle financing. And you can imagine how many people fall for vehicles, right? You have a 60-year-old who wants to buy a car and you have a 70-year-old who wants to. So everyone's a lot more. So you got to make sure you do the right thing and the right customer service. The last thing that I want is someone to say, oh, dealing with Muslims is not a good experience, right? This is the last thing I want, because we know this is always an excuse. See what happens when we deal with them? So we roll out state by state, make sure we know what we're doing, and then soon we'll be opening up several states at once. So it won't be a slow opening, it'll be open 4 or 5 states at a time in the show. So once again, Jazakallah khair, I will end it. I know that we have Salat al-Isha. Please reach out.